All right, let's get started. The first thing we always do is we look at the market, and we look at the market from a different perspective than most of you guys will. All right, we look at the market a little differently. So let's start off by showing you, especially if you're new to the software, what you'll see when you first sign into the VectorVest software. Our home page is integral in helping you to have a better understanding of what's going on in the market and how to best approach the market. And that's important because if you're trading stocks, you need to know what's going on in the market to make the right decisions on what to do with those stocks. But if you're not trading stocks, you need to have an idea of whether you need to be bullish or bearish. Our homepage hones in on all of those different things right from the onset to get you on the right side of the market. Market timing is that important. Now, for those of you who don't feel that you can time the market, when I say we time the market, we don't predict which way the market is going to go. We are trend followers, and we keep you guys on the right side of the trend at all times. So when I say time the market, we're talking about what's going on as far as a trend. Is the market trending up? Is it trending down? Is it moving sideways? We have indicators that will put into your hands by way of your fingertips as to what's really going on in the market. So let's start off on our home page. From the home page, you can see we are using the VectorVest real-time data. For those of you who may be new, we have three different data packages. We have real-time, which is real-time tick-by-tick data. We have intraday, which is 15-minute delayed. And we have end of day, which only updates once a day. So depending on how active you are in the market, we have the data program or package that will fit how you invest in the market. Because we're looking at real-time data, I can see the major indices throughout the day. Here's the Dow, the NASDAQ, the S&P 5 and 100, and something that may be new to many of you is the VVC or the VectorVest Composite. So clearly, I can see that all of the major indices are moving up today, all right, and the Dow is up 50 points, up about 0.2%. The big winner so far right now is the S&P 500, pushing almost 0.4%. Our VectorVest Composite is different from the major indices that you may be used to. The Dow tracks 30 stocks. The NASDAQ tracks about 4,300 stocks, and the S&P, of course, tracks 500 stocks. So in the Dow, when it moves, we say that the market is moving higher. But again, it's only 30 stocks, albeit 30 of the most popular, heavily traded stocks, but 30 stocks nonetheless. The NASDAQ is a little different. It tracks the move of about 4,300 stocks or so. But that index, the IXIC or NASDAQ, is very tech-weighted. So a lot of the stocks, majority of the stocks in that index are tech stocks. Your Apples, your Netflix, your Googles. And even though it tracks a lot more stocks, it's very tech-heavy. Now, the S&P 500 is the index or the indice that most people use to track the movement of their portfolio. Is their portfolio making money or not? And they use the S&P 500. It does track 500 stocks. Now, let's get down to the VVC or the VectorVest Composite. The VectorVest Composite is an indexed arithmetic average of all of the stocks that are in our database. Currently, we're tracking 8,269 stocks. And then from those stocks, we can show you which of those stocks have buy recommendations in the software, which ones have sell recommendations, and which ones have hold recommendations. When we look at the VectorVest Composite and the amount of stocks that it tracks and the price of all of those stocks together, we feel that it is a better representation of broad market movement. So that VectorVest Composite, looking at all of those stocks, we use that to track the market. Now, I'm going to take that VectorVest Composite and I'm going to put it on a market timing graph. This is a graph that shows the movement of all of those stocks now shown in candlesticks. Let's do it this way. Something ain't right. Put it on 1 year. Now shown in candlesticks over the last year. All right? Now, we can clearly see when the market is moving up, when the market is moving down, and when the market is moving sideways. So it's a little different, a little bit more comprehensive than just looking at 30 stocks or 500 stocks or even 4,300 stocks that are very tech-heavy weighted. I can clearly see, and put this on a 3-month graph. Why did my graph not change here? There we go. Put this on a 3-month graph, and we can see big move down back in September, down to October, big down days in the VectorVest Composite. But currently, right now, the market's moving higher. We have moving averages on that VVC or VectorVest Composite. The two moving averages that we're using are a 3 and an 8 exponential moving average. It does a really good job of showing a trend, whether it's up or whether it's down. When the market moves sideways, though, it's hard for the market, or it's hard for moving averages to work in a sideways moving market. You use a different indicator. But right now we are trending higher. We're off the highs over the last couple of days, all right? But approaching a new 1 month / 3 month / 6 month high as of today's market action. Nice big green open candle today. How am I supposed to listen to Trending Thursday and Jockey Club at the same time? Sorry, Joff, you're not. I know normally we do the Jockey Club, and I'm not doing it today, but thank you for being here. So today's activity, nice open green candle approaching the high that we had a couple of days ago on 11/7. The high of the VectorVest Composite on that date was $48.80, and we're about 6 cents off of that. If we can take that out, that is still a good sign for the market. Now, let's take this market information and let's find out what news is moving the market. Keep in mind, the market is very news driven. What's the two things that are moving the market? Type it in the room. Type it in. What two things are actually moving the market? How about, there we go, bids and asks. That's not what I'm looking for, Rich. Think about it. What two things by way of news are moving the market? Not, wow, Rich, no. Interest rates. Stop, Rich. Interest rates and the trade war. Those are the two things that are primarily moving the market. And you know something? On a good day, we have good news on interest rates or on the U.S.-China trade. And on a bad day, we have bad news about either interest rates or the U.S.-China trade deal. There you go. Thank you, Con. Con says trade deal and Trump. You know something? I'm even going to put Trump on the back burner right now. The two main things, Con, I still think are interest rates, whether we're going to drop them some more or even get to negative interest rates, and looking at what's going on between the trade war between the U.S. and China. So let's get into the news. There we go. We're going to start off with the interest rates. More Fed officials signal no further changes in monetary policy. How do you think that's going to affect the market? When the Fed has been dropping interest rates over the last couple of times around, okay, the market has responded in a positive fashion. If the Fed is starting to signal no more changes in monetary policy, how do you think that's going to affect the market going into the end of the year? Two more Fed officials signaled today they didn't see a need for further monetary policy action right now. Now, these are Fed officials, not the Fed chief. The Fed chief makes the final decision, right? But he does listen to his Fed counterparts. The 3 rate cuts we did were very effective at managing the risks to the economy that emerged from a trade uncertainty and slowing global growth. Now, globally, markets across the world are still entering into that realm of recession. We globally have the best market right now, actually the best economy. There's a difference between the market and the economy. We still have the best economy across the globe, and a lot of that is being spurred on by interest rates cuts. Now, when does the Fed normally cut rates? They normally cut rates when the market is really floundering, so that they can cut rates to spur on the economy. Well, the market is rocking and rolling, and it has been, right? So you say to yourself, why are we cutting rates? Well, we're cutting rates to stay ahead of everybody else and to us to have the better economy. Now, there's a bad side to that. Stronger economy, stronger dollar. Stronger dollar, who's going to want to buy stuff from us and have to pay bigger prices or more exorbitant prices because their economy is not doing good? So at some point in time, The Fed's going to have to make a decision. We're still the best economy right now, but we don't need to continue to cut rates to spur on the economy if it's already rocking and rolling. So something to keep in mind. Where do we go from here? Well, actually, where we go from here will depend on the information we receive. What we've learned about the economic outlook, he said, indicating that any future rate changes won't be focused on providing insurance against potential risks. All right, so that is one story dealing with one side of the news, which is on the interest rates cuts. And then I'm going to go to another side of the news, which is dealing with the tariffs. Stocks take a leg down after Reuters reports that White House advisors and President Trump's re-election campaign are pushing back on the prospect that the Phase 1 U.S.-China trade deal will include rolling back tariffs. A couple of days ago, the market went up nicely because we were talking about rolling back some tariffs that would take place in December. Now the president is coming out saying, well, we may not roll back those tariffs. But the market hasn't responded to that in a negative way thus yet. The NASDAQ, and this was as of on November 7th, talking about what was going on. And so now let's take these two stories. Let's take these two stories and tie them into the software. There's my watch list for trending Thursday, Tuesday. All right, so now let's talk about, stocks specifically for the market. One of them we're going to use is our VectorVest Composite. Remember, that's an index arithmetic average of the over 8,200 stocks that we track. And I'm going to use a very widely used indice, which is the spiders. All right, so based on these two things, let's look at what's going on with the spiders, and let's look at what's going on with our VectorVest Composite. I highlighted those two. I'm going to right-click, and I'm going to go down to View Stock Graph. Move this over, pop that up. Now, here's the VectorVest Composite. I'm going to put it on a 3-month graph. The VectorVest Composite, nicely moving higher. In this graph, I now have a 20-day exponential moving average serving as a beautiful level of support. The market is moving up. As I mentioned earlier, we're about 6 cents or so, now only 4 cents off of the 3-month high on that indexed arithmetic average of all of the stocks that we track. Let's go to what many of you know. Look at the spiders. Same scenario. Now remember, these indices, both the spiders and the Dow and the NASDAQ and the VectorVest Composite will all look alike. But keep in mind, the VectorVest Composite has a little bit more insight because of the many amount of stocks that it tracks. Here's the spiders moving up. How about the spiders are hitting a new 3-month high? How about the spiders are very close? Look at that. That's a 1-year high. How about the spiders are hitting an all-time high? Here's 10 years worth of the spiders. 10 years worth of the spiders. And how about the spiders on the SPY over the last 10 years hitting an all-time high? So couple that with what's going on with the VectorVest Composite, looking at the news that is affecting the market. Right now, we're still moving higher. The negative news about not changing the monetary policy, possibly not dropping interest rates lower, still hasn't hit yet, and people are still, out. The jury is still out on that. This was just preliminary news, but remember, the Fed chief, the Fed chairman, has the power to do it or not do it. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.